we are joined by one of our favorite contributors here. This is Tim Ord of the Ord Oracle. You should go over to ord-oracle.com and check out what he has to offer. Additionally, you can go to TFNN.com and go to that services tab, and we have two fantastic webinars. There's a lot of questions. Have we made tops? Have we made bottoms? He actually has a very good webinar, now that I think about it, over on the services tab, and that is the secret science of market tops. Check these out. Tim, are you with us right now?
We just listened to your commentary, so you sound good on the radio. Anyhow,
thanks, Tim.
Let's look at, this is a little bit on the frustrating side. Yes. I'm still long, and actually I still think we're at a short-term low. The news came out about the tariffs. The market knew the tariffs were coming, even a couple of weeks ago. I thought it might absorbed into the market. Yeah. But as soon as he started speaking yesterday, the market plunged. But this is a chart that looks at the bigger picture again. This is a 3-week average of the Association of Individual Investors bull-bear ratio. Anything below 0.75 is bullish, which that happened actually a couple of weeks ago. This is a weekly chart, so it doesn't pretend to pick out the exact day, but it picks out normally majority of the bottom, I'll put it that way. So this indicator is still at a low, or 0.42 right now. So anyhow, indicators really don't lie. They really tell, at least if you get the right ones, to tell the move of the market. So let's go to chart number 2. We actually had this yesterday, and I think the ratio was around pretty close to that. I think it was 25.29. Well, anyhow, the middle window is the weekly, because I'm doing everything on the weekly right now, is the SPX tilt ratio. So that's the bond market against the equity market. Yep. It measures the fluctuation of them. If the bond market's doing much better than the equity market, the RSI goes way up. If it goes and vice versa to the downside. So it's kind of like a rubber band being stretched. And this is a weekly chart again. So we're at anything below 30 is the bottom. We're at 25.47 right now. So we're looking at least some sort of a snapback rally. And the next rally will tell kind of a story of what goes on next. But I also want to point out this chart. This ratio very seldom gets below its lower Bollinger Band. Right now we're 100% below the open and close is 100% below the lower Bollinger Band, which is the extreme right window here. And same with the weekly SPX. We open and close. The close is, it's a weekly. Depends what tomorrow does. But if both of them close below the weekly lower Bollinger Band, it's really stretched. And I can pick out several times over the last several years, but there's not many times. So it's kind of a rare occurrence. It's happening right now. Does that mean these indicators don't work anymore? Not at all. They are going to work, and you probably see some sort of snapback rally. I hope not tomorrow, and I'll explain that later, but I hope this market actually stays in this vicinity and not rally tomorrow. I'll tell you why before what happens, because you don't want it to rally. Here's an indicator that actually gave a buy signal back at the March 13th low, which is basically this is the weekly VIX hitting above the upper Bollinger Band, and the SPX hitting below its lower Bollinger Band. That's normally those signals are right off the bat, normally work right away. Here we got one, we got actually another one right now. So the first one evidently has failed, but now you got 100% of the trading range on the weekly time frames below where the open close below the lower Bollinger Band. You can kind of see it over here, and now you're way above the upper Bollinger Band on the VIX. So that means VIX accelerated. That's 2 standard deviation away from the norm. So the market kind of normalizes itself. It goes. For bottoms, you really want the market not to creep down, but you want to crash. And for the uptrend, you want for a topping out of the curve, you want to kind of have an exhaust move to the upside. Those are usually a little easier to pick out. The ones that kind of creep up, go on for a long time, or the markets that just kind of creep down can go a long time. So you want to
popular man.
So you want to, somebody's trying to call me here, but anyhow, you want to see acceleration. Acceleration is the key to this market.
Sure.
So we got quite a bit of acceleration to the downside. You got acceleration to the upside. And that's the kind of chart that proves it. And this is on a weekly time frame, not a daily. So you're looking at a bigger time frame for something to occur. So wherever the next rally starts, it's usually a multi-week rally. So that's I'm still thinking the same thing, even though the market's down. So let's kind of look at. Oh, okay, got our break already?
Yeah. Well, Tim, can you stay right there? I know we have a lot to talk about today. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we're taking a look at some charts of the SPY.
Okay, here's a daily, and I kind of crude. I meant to put this in, but I put kind of a crude deal. But we closed yesterday up here. This is what I'm talking about, right? This area right here, and the market, closed up here and opened up down here, which is close to 4% gap down, and it's probably an exhaustion gap. It's so you get gaps that big. There's a lot of energy in those. If you get small gaps breaking through areas, they can continue. But if you get an exhaustion gap, which is, this is huge, it's, 3.5%, 4% gap down. So I'm thinking this is an exhaustion gap. And also, if you notice over here, we got to close below the lower Bollinger Band. This is a daily. Like I said, just a minute ago, we close. If we stay around this region, the open and close on the weekly time frames will be below the lower Bollinger Band. And this is a daily. So if we close in this vicinity here, we'll have the open and close on the daily below the Bollinger Band. So you got a combination of weekly and daily. And what I really want to point out, if this market, if you look at the lower Bollinger Band here, we're kind of going sideways, sort of. Then you close below the low Bollinger Band, the market took off. Here you kind of got a sideways Bollinger Band on the lower Bollinger Band, you kind of took off. And kind of saying here, it's actually Bollinger Band was rallying, but the Bollinger Band is actually higher than it was a couple of weeks ago. And you got a kind of same situation where the market, lower Bollinger Band is actually semi-trading sideways. So I still think this is the low in this vicinity. What's lacking on this decline, but it seemed to be changing right now, is a trend. We're trend just not blowing out, but today we got our 1.19. That may change a little bit, but it's kind of been rising over the last couple hours. We got 482 downtick readings. If we get that combination on the close, that suggests you'll have a low today to as late as 2 days later, which would be Monday. So I still think, the tariff announcement put a lot of chill in the market, but I don't think it's turning into a long-term bottom, but rather exhaustion to the downside. And I like to see panic, and we got panic in kind of several different indicators, but trend is my main thing. I think sometimes you don't get it. If you don't get a panic on the trend reading, you get what you call a dead cat bounce. A dead cat bounce is not a lasting rally. It goes up and comes back down. And that could be developing here. But again, if you ever look at the bear market rallies, they're fast and furious.
Yeah.
They just totally blow up to the upside. So I think that's what's in front of us over the next couple of weeks, is some sort of a dead cat bounce to the upside. And normally, if you close below the previous lows, which if today's trading holds below the previous two lows, especially on a weekly time frame. So we actually stay here in this vicinity and close below the last 2 weeks lows. Normally, if you can't hold below the previous lows, you break out to the previous highs. So that's why I'm saying we're probably going to, if we can close here tomorrow in this vicinity, even a little lower, doesn't really matter, and you turn around and come back up, you'll take out this previous high up here.
Okay.
So we're back up, probably take an attempt to probably get back close to the mid-Bollinger Band, I think. There's always a story at the bottoms, too. Whatever it is, everybody leans on that story for the reason to stay short or stay long, whatever the reason may be. They call it the hook. Nice. And this time around, it's the tariffs. And next time it'll be something else. And it's all absorbing And so we got the hook, we got the things. Ideally, we'd like to see the trend today close around 1.2, preferably higher, and ticks exceeding minus 300 to the downside. If we do, the odds really increase that, yeah, this is a low of worthiness, I guess, and some sort of a rally back up to at least break the previous highs. So that's my prediction. I am actually long from February 25th. So I did a couple of things wrong in this trade, but I still think I'll get back close to even. And it depends how the next trade goes. If we do have a sign of strength off this low, that'll change the perspective of everything. And you can have signs of strength in a couple of different ways: advanced decline type of sign of strength, or a volume sign of strength. Either one, or preferably both. We'll be watching how that rally performs. So if we get really strong rally off the bottom and you got advanced decline going with it, then you got something real. If you don't, it's probably a dead cat bounce, and could be a hard year. So we'll see how that works out. So got the gold market.
Absolutely. I think we need to cut into it. Obviously, I know we talk about the miners, but I just want to put out the gold contract itself is kind of pulling back as well with all of this news, off about 1.32%. What are we taking a look at with the GDX?
Actually, one more thing on here, and
this
is a weekly chart. Kind of shows you what I'm looking at. Volume. This is current volume a couple hours ago, but ideally if volume is less, 10% less than the previous low volume, which I got an arrow pointing to it, then that would be a weekly buy signal on the volume studies. And you can see that we're closed below the lower Bollinger Band. That's the reason why I don't want to see a rally this today or tomorrow, preferably below that lower Bollinger Band, because what happens normally the week after would be something similar. Like a lot of times they gap up, but they don't let you in. So
right,
if they don't let you in, it's going to go for a while.
It's because you're looking at that Bollinger Band, like that close below the Bollinger Band on the weekly, correct?
Yeah, on the weekly. Yeah. So a lot of, anyhow, usually these rallies off these lows are really fast. So, and usually on Fridays they make you scared, so they make you sweat all weekend if you're long. So the Friday's usually the best time to buy. But we got a couple of minutes here, I guess.
Yeah, we can stay over to the next segment as well if you need to. So, all
right, this gold market, there's really nothing. This is bottom indicator. This is a 50-day average of the up-down volume. So it's about 50 days was it's what 3. It's a long time. So it's a big moving average, and so long this moving average up-down volume stays above 0. Right here, the uptrend's intact, and all that green area is what's happening. And we're not even coming off the very high levels here. We're staying pretty close to plus 12 or 1630 right now. We're staying close to that plus 20, plus 15 area. And that shows the up volume is way exceeding the down volume. And that's what happens in uptrends. So uptrend's still intact. You can have some minor pullbacks, but not top of any consequence.
Well, Tim, do you have time? Perfect.
Yep, I do.
Folks, stay right there. We'll be right back with Tim Ord to talk about GDX right after the break. Welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, we're just cracking into looking at GDX.
Yep. So anyhow, this momentum chart is a 10-day. Well, it's actually a 10-week average, I guess. Anyhow, it's bullish. So as long as this indicator stays above 0, the uptrend's intact. So it's not getting any weaker because this indicator is just still holding pretty strong as a market. It can go up and down a little bit here, but you got 43, which is basically the previous high support. And before, I think this whole thing's this whole pattern here is a head and shoulders bottom, which has an upside target around 65. So we'll see how that plays out. But on a short-term basis, there's not seeing any weakness yet. So I do have an 18-day average and of an up-down volume and advanced client indicators. They're also short-term. They're staying strong. So even the short-term looks okay. So not any signs of a top of any consequence. So looks good. This is last time or yesterday I showed the monthly chart of the bottom windows of cumulative advanced decline. and this is the weekly chart. Next window higher is the cumulative advanced decline on the weekly time frame. As long as those, so it looks at a different picture of the same thing, I guess you might say. But as long as those two indicators are trending up and making higher highs, which you can see they are, both of them are making higher highs, the uptrend's intact. So no divergence. The buy signal that comes when both those indicators close above the mid-Bollinger Band, the sell signal when it closes below the mid-Bollinger Band, and these are the sell signals back here and here. So these indicators, when they trigger, usually they're about a year and a half to 3 year time frames. So we got triggered, I think, back in March of last year. So it's been about a year into this move right now. And right now, there's no sign of a reversal, and we're actually a long way from mid-Bollinger Band, so I don't see any trouble to concern right now. So these gold stocks are starting to perform, and I think we're still fairly early in the game. So this could be back in 2000. I actually caught that low, and me and Tom O'Brien rode that for I think went on to 2012. So you had some consolidations along the way.
Big time.
But I'm thinking we're something similar to this. We'll have some consolidations that may last 6 months, even 9 months consolidations. But I'm thinking this cycle around is a bigger cycle, because a lot of these gold stocks totally got decimated. I mean, some of these dollar, or $20, $30 stocks went into, the penny market. And so that's so I think that there's a big move here starting, and we're still early in the game, I'll put it that way. Now, if things change, these indicators will change with it. So, but right now, I don't see a top of any consequence, I'll put it that way.
Okay.
So, you got questions?
No, I think this is great, and it's nice. I'm kind of, obviously with listening to the GDX is fantastic with it, and I'm still digesting a lot of what you were saying, even with the SPY, right? And I am concerned a little bit, if I can kind of go back to that for a second, of kind of what you're saying with like a dead cat bounce. I'm still, and again, like I'm hearing some talking heads continuing again. That's not the full sentimental picture, right? But it still seems like there is somewhat of a positive sentiment even after today. And so I get concerned that, from that perspective, you can see more money kind of pumped in, and we get something like a dead cat bounce, right? I don't know if, I'm sure we'll keep following along with it. But anyways, I just find that interesting that you might be able to see something like that as well on your end.
Try his charts here. I'm thinking we're going for this low right here.
Yeah,
that's what we're thinking for. But anyhow, we're not too far away from it. But the people really make the money in the market is people that walk in when everybody's exiting it, and so you got to have indicators that find out where the fear is. So panic is the best friend you can have in a market.
Yes.
And are we having enough panic right now? The only thing bothering me is the trend. And I think that's the reason why I'm thinking this is probably the next rally. It's not going to be a real rally.
Wait, isn't that strange that the panic isn't? I mean, yeah, definitely. It doesn't seem like there is that.
Right, and the trend kind of identifies that. So you'll have just really strong rallies, and they kind of blow themselves out. So I'm thinking that's what's going to happen here. So I'll be getting out on the next rally unless we see some sort of spike in volume where it's and also a spike in advanced decline. I don't think that's going to happen, but it could. If it does, I'll play it. But I still think the best scenario is probably up around the mid-Bollinger Band. Then from there, I don't know. So I don't know, but I think this low here is probably going to. We're attempting to test it. I'm watching. This is a weekly volume, and we talked about the daily volume. But if we get the get the weekly volume less than what happened to the previous lows back on the week of March 13th, then there's probably a legitimate buy signal that could last a month or at most.
Right.
Probably. Then and usually tops, the volume kind of just drops out. It just really dissipates.
Yeah,
so we'll see how that.
Right.
Yeah, so it gets real narrow, gets quiet at the top, and It's kind of tricky at the top because top takes a lot longer than bottom.
Well, and you can see that on February 20th, 2019. I mean, you had that high of 613 and just a lot of contracting volume throughout that time. And that really kind of marked our descent, to the downside.
Which is also the previous lows. And I was thinking about it, taking that position off. And I'm thinking, well, it could pop through that. A lot of times the market kind of fools you a little bit. Now I wish I did. And look for a reason to get long again, which I would be probably long again tomorrow. But I'm not. And so I'll wait to see how this dead cat bounce, I think, is probably what it's going to be. That's a rally that doesn't really fall through to the upside. They call them dead cats. And but it could turn an impulse wave too, which are real waves to the upside. But you can also see quite a bit here. Energies, if you look at this, the volume to the downside compared to how you were going up into the upside, this volume here is quite a bit lighter than what's going on right now. So energy goes in the direction of the market. And I wish we had panic here, a lot more panic than what we got. We don't. So it's going to be a tough year probably. So
I think so too, Tim. Well, Tim, listen, thank you for coming on. I know it was 2 days in a row, but we had some great stuff happening today, at least with market dynamics. So thank you for coming on, Tim. And I guess we'll see you Tuesday.
Yep. See you Tuesday. So thanks a lot.
Yep. Thank you, Tim. See you then.